Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewiton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
All right, let's take a look at what Bitcoin's up to. Bitcoin is slightly down, as well as the crypto markets right now, trading at 45,709. Bitcoin is down about 3.5% over the past 24 hours. And the Coindesk ETX index right now at 3041. ETH is down over 6% over the past 24 hours. And taking a look at the DFX, Coindesk DeFi index is trading at 647. DeFi is tanking about over 12% over the past 24 hours. All right, so taking a look at the markets briefly, I mean, we kind of saw this coming because of low volumes, right, Lawrence?
Yeah, it's pretty much what I was going to say. I mean, like, you look at the volumes that have been happening over the past few weeks into this rally, and they just didn't match when we were at this price point months ago to that run up to 60,000. We are about a one-third less the amount of trades happening in dollar terms, never mind in Bitcoin terms, but in dollar terms happening on the exchanges. So, you know, again, that's because a lot of that Asia volume has diminished back since then. And also, it's just there are some questions about what's really driving the rally to begin with, and whether or not it's just a few players pushing Bitcoin prices around. So, you know, we hear about institutions, we hear about all that stuff, but there's more to it than that.
Yeah, so Bitcoin and the crypto markets losing its mojo a bit, but not everything is down. I mean, if you're looking at some assets like NFTs, they're up 5,000% year to date, according to some ARCA data on their weekly digital assets analysis, right, Emily?
Yeah, so I feel like we were talking about NFTs all the time, and then we kind of forgot about NFTs for a while because it seemed like the market was down, but now the market is definitely not down. According to our own reporting, sales of NFTs on the major NFT platform OpenSea were at 60,000 a day. So the NFT market is booming. It's a global phenomenon. So yeah, it's pretty interesting to see.
All right, let's take a look at our crypto markets guest.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the crypto markets and more is Marketgauge Managing Director Michele Schneider in New Mexico. Welcome, Michele. So what are some of the fundamentals you see leading to this pullback in the crypto markets today?
Well, it could just be some good profit taking, because what's so interesting, and also a little bit of fear of what's happened here with this bill that has passed, the crypto bill that has passed, which will actually tax especially the miners, would tax them exactly the way that traders would be taxed and that exchanges would be taxed. And that has created a little bit of fear, I think, that some of the miners that have trying to come back into the United States will actually leave, possibly going into Canada. That could have some overlying effect, but I've also seen that there's been big whale buying here, which generally turns out to be bullish. So it's if we go back before I left for vacation, which was so interesting because when we talked, actually right before I left, Bitcoin was trading between 33 and 34, and it was actually quite dull. And now here we are between 44 and 46. So even though we've come off, we look back just a little bit, and I know memories tend to be very short, we're actually up pretty good since then. So I wouldn't necessarily get too concerned unless we really start to fall and break back down, let's say under 40,000, which 41, which was the pivotal number we had to clear 3 weeks ago.
Michele,
I just wanted to follow up with you on your point. I just had to follow up with you on your point on the infrastructure bill. You know, it's kind of interesting because maybe that's affecting the market, but if you look at the few days after, you know, the infrastructure bill, the provision went through the Senate, Bitcoin was actually up around 7%. So my observation is that it's not the market isn't really reacting to the infrastructure bill. And I was just curious to hear more of your thoughts on that, because it seems like for something that there was so much commotion about and so much fear over, when the language went through, the market reacted in a more muted way than I think a lot of people expected.
Well, Well, it also could be, and you're right, Emily. I mean, definitely the initial reaction was up, but we also know that the initial reaction is not necessarily what happens over the long run. But with that said, it sort of snuck in the language about the taxes in that infrastructure bill. It was announced, but you wonder how many people actually really paid attention. I even had to comb through it to see what the language was precisely related to crypto. So again, we've come off from the high of what we saw on this recent rally, but we're still just basically seeing the dust settle at this point. And from a technical standpoint, since we couldn't get through this 46 for very long, we actually, if you look at the charts, it does look a little bit like maybe if 44 breaks, we could see 40 again, but that I think would be a healthy correction and possibly a place to get back in if you're not already in it from lower levels.
Nonetheless, Michele, I mean, it just seems that there was less to this rally than we've made it out to be in a lot of ways, just because, again, as you were mentioning, as we've talked about as well, lower volumes. And also, you talked about the whales that are getting involved. Is it possible that these whales are doing things in crypto that have little to do with bullishness or bearishness, but more, let's say, moving around money here and there, primarily because of regulatory issues that they may be facing? I'm thinking of a couple of very large exchanges in Asia, which are right now facing some heat and are moving their coins around, and it looks like whale buying. So is that something that could be happening here, where the market is sort of fooled into thinking there's a rally happening, and then it doesn't go to fruition? There isn't enough support for it, and then you have that pullback, and that pullback is not necessarily a bullish sign or a dip to buy in, but a worrisome sign.
Well, of course, anything is possible, but just in the world of trading in general, when you have a low volume, first of all, we have to understand that it is the summer. And generally, I mean, if you look at the overall stock market, the volumes have been extremely low, except for pockets here and there. So, of course, anything is possible. But another thing that's been happening in the crypto world, which is very interesting this week, is that some of the altcoins, most of them would draw down to support levels along with what would happen with Bitcoin. But there's a couple of large cap projects that have done very well. One being Polkadot, which is down today, but actually reached on Monday new all-time highs. And the other one is Solana, which is actually up to another new high as we speak. When I looked last, it was trading at like 76.60. And these are two of the top cryptocurrencies by market cap. They're actually positioned number 9 and number 10. And so, you know, they're kind of like blockchain, Ethereum, DeFi, and each project has its own features. But we're seeing sort of a rotation as more interest comes into some of these other altcoins. And so we're looking at Bitcoin, of course, as the granddaddy, but it's also really fascinating. And I think that's what makes this space exciting, but also very confusing, is when you start to look at it, all these altcoins, what starts to take the headlines. And of course, right now, it looks more like Solana today is the one to keep an eye on.
Michele, I'm curious, how are you investing in these altcoins?
Well, we actually bought some Bitcoin last week. We started a little crypto fund that we've been trading lightly. So we're actually buying real coin. But of course, we also, for a lot of our clients, have always done some of the more ancillary ways to trade it, like through Square or Riot or whatever. But they haven't been performing as well traditionally as when we first got started. And unfortunately, right before I left, I wanted to buy COIN, but I left on vacation, so we didn't.
Do you think
but
Solana will overtake Ethereum?
I don't know. I would not be able to give you a good answer on that at this point. But let's watch Ethereum too. I mean, it's kind of like Bitcoin. It's the grandma to the granddad. And so if it holds 3,000, I think that would be a good sign. Maybe it needs to get back through 3,250. I don't know if Solana's big enough as market cap down really at 9 and 10 to overtake Ethereum. But of course, as we know in this game, anything is possible.
It's being suggested as a serious challenger to Ethereum. But Michele, we'll end it there. Thank you so much for your insights and great to have you back. That was Marketgauge Managing Director Michele Schneider. Coming up, checking in on Asia, and the IRS is turning out to be a great partner for our next guest, whose company reached unicorn status. For the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 18th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, the Poly Network saga takes another twist by offering its hacker a job. Hong Kong-based BitMining sees its revenue surge, and the latest use for NFTs, care packages for displaced Afghan families. Let's get you up to speed from Asia to the world. First up, the Poly Network hacking saga has taken yet another turn. Not only is Poly Network still offering Mr. White Hat a bounty of $500,000 US, they've now also offered a job. In a tweet, the company said it cordially invites him to be our chief security advisor. Assuming it is a him, it's an interesting offer to someone who so very publicly humiliated the project. So why do it? Forecast News' Monica Ghosh has the latest.
In a statement, Poly Network said that while there had been misunderstandings between the two, they now understand Mr. Whitehat's vision for DeFi in the crypto world, and it's in line with their ambitions. Mr. Whitehat responded to the job offer with a joke posted on Ethereum and shared on Twitter by Elliptic founder Tom Robinson. It's not clear whether that could count as a yes or a no. One expert told Forecast News we are likely to see more blockchain companies offering rewards to ethical white hat hackers who spot bugs.
I think it's a natural progression. As a lot of the blockchain companies are maturing, you're absolutely going to see them, going to different sources to come up with different bounty systems.
And one ethical hacker told us they are essential for developing trust.
So to show to your investor and your customers that you do have a mechanism to uncover holes you need to run through bug bounty program.
Indeed, there are many white hat hackers out there, and one of them has helped decentralized exchange SushiSwap avoid a potential $350 million US hack to its Meso token sale. A researcher at venture capital fund Paradigm, who spotted a flaw in the code, pointed it out and worked with SushiSwap to neutralize the threat. For Forecast News, I'm Monica Ghosh.
Meanwhile, Hong Kong-based crypto miner BitMining has seen its net revenue surge. In its Q2 earnings release, the company says net revenue for the quarter ended June 30th was almost $450 million US. That's a massive leap from the $3 million it reported in the previous quarter. The company says that revenue jump is in large part thanks to its acquisition of the mining pool BTC.com. So what's next for global mining domination plans? Forecast News' Timmy Shen has more from Taipei, Taiwan.
In its report, BIT Mining says it has completed its transition to an enterprise covering cryptocurrency mining, data center operation, and mining pool. Previously an online lottery operator, the company announced it was starting that pivot in January. Now, the focus is on expanding mining operations globally, as well as construction of a data center outside of mainland China. It is due to begin operation late in the third quarter of this year. That strategy follows China's clampdown on cryptocurrency mining, which has seen a mass exodus of miners to countries including Kazakhstan. BIT Mining now has a potential hash rate capacity of almost 300 quadrillion hashes per second, in the country, though not all of their machines there have been deployed as yet. For Forecast News, I'm Timi Shan, Taipei, Taiwan.
And finally today, could philanthropy prove to be the next real-life application for NFTs? With the Taliban takeover of Afghanistan hitting headlines around the world, many people have been thinking about ways to help those whose lives have been turned upside down as a result. Jack Butcher, the founder of Visualize Value, is one of them. And he's hit upon the idea of using NFTs for good, setting up a fund to distribute care packages for families displaced by the conflict. Those NFTs are priced at 0.028 ETH, or $89.50. The money goes to care.org, who say it's enough to cover one family's emergency needs, including food, water, and shelter for a month. It's another interesting real-life use case for NFTs, some digital solace, if you will, for those displaced in this growing crisis. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Crypto tax software firm TaxBit restocking its war chest with a $130 million Series B funding raise that valued the startup at $1.3 billion. The Seattle-based firm provides reporting software to the IRS and various institutional clients. Joining us now is TaxBit CEO Austin Woodward. Hi there, Austin. Thanks for joining us. So, just off the bat, you've just raised this huge amount of money. What are you going to do with all this funding raise? How are you going to expand?
Yeah, great to be here. Good morning. We're super fortunate where we're at the emergence right now of widespread digital asset adoption. And I say digital assets because we started with cryptocurrency and we're slowly realizing that, or I should say quickly realizing that this is extending to the tokenization of so many different types of asset classes, real estate, commodities, equities, NFTs. I think tokenization is at the forefront of our entire economy. And so tax is at the center of that as far as a huge hurdle from the regulatory standpoint of how can we solve this in a way that's not burdensome on the back end to enterprises, governments, and consumers. And so the funding round is really just revolving around that mission. In order to solve this problem, it does take a war chest and a massive team that this is all we live, do, and breathe every single day is solve the problem of tax and accounting for the digital economy.
Hi, welcome to the show. So there has been a lot of talk about crypto taxes recently, specifically in reference to the infrastructure bill, and crypto advocates have been, freaking out, to put it mildly, about some of the tax language in the bill. I'd be curious about your perspective. How big a deal is this? I mean, what people are claiming is that the way that this is written, it would basically compel various actors in the crypto economy, such as miners, validators, software developers, to comply in a way that is impossible to comply. Like, is that, and thus could eventually force them out of the United States. Is that critique grounded in reality, or is it a bit exaggerated?
Yeah, there's a lot to digest in this bill, for sure. I think, let me speak to it in pieces. First and foremost, this is something that TaxBit anticipated for about 3.5 years now. We built our software around information reporting, where brokers have 1099 obligations and they're helping their users compile their data for their taxes and reporting cost basis and other activities to them where available. And so we're well prepared. We're already doing this. Dozens of financial institutions are using TaxBit to run their 1099 programs right now. So when this bill came out, first reaction was about time. I think this is a net positive thing where the industry can start to have some formal guidance and progress, and it can be viewed as more mainstream. Second reaction, to your point, was surprised at the breadth that this bill covered, where miners, stakers, hardware and software wallet providers definitely was taken back by that, because when you think about that, I'm with you. I do think that would be very difficult to comply with, as these are protocols that are paying these individuals, and it's kind of the backbone of cryptocurrency is miners and verifiers on the blockchain. So I do anticipate that there will be some revisions and potential carve-outs as this thing ultimately goes through the regulatory process and gets finalized. That's my personal hypothesis, and something I believe will happen.
So, Austin, from your perspective, from TaxBit's perspective, is this kind of vagueness, this kind of issue with the infrastructure bill actually good for business or great for business? Are you guys going to be like H&R Block, quietly lobbying Congress members to make the tax code as complicated as possible for crypto, to spur business?
No, absolutely not. For us, I'm a cryptocurrency person at heart. And so I really want to see the industry thrive and progress and keeping up and coming businesses here on the US shores. And so to the contrary, I think TaxBit has a front row seat, having done this now for several years, to be able to really give the best practitioner level viewpoint in the entire world as related to 1099 reporting. What's possible, what's not. Like, this has been in our wheelhouse and something that we pioneered essentially. And so, no, to the contrary, definitely we'll be working with regulators to find a middle ground that makes sense for the entire industry to progress.
Well, I find it interesting that you are working with the IRS as a client, and this infrastructure bill has earmarked about $28 billion in crypto tax revenue. So everyone is wondering, how did they come up with that number?
Yeah, I won't speak for them, but it is very clear that there is an enormous tax gap in America. And the tax gap is defined as the number of known U.S. users that are trading and transacting cryptocurrency compared to those that have filed or reported anything on their taxes. That is massive. Obviously, can't speak into too much detail given we work with the IRS on a day-to-day basis, but that has been proved. And so the only way this same tax gap exists back in the early 2000s in the equity space. When you look at that landscape, this is all not too dissimilar, where 1099 reporting didn't exist in equities on these stock exchanges platforms until the 1099B mandate, and that form was invented in the early 2000s. Prior to that, everything was self-reported. And so for us, it was inevitable that this information reporting landscape was going to follow the footsteps of what happened in the early 2000s, where that tax gap completely closed once the 1099B tax form was introduced. And the IRS is under the opinion that that same thing will happen here in cryptocurrency, where that gap will close therein.
So, Austin, but how realistic is it? And where do you see revenues coming in? If you had to guesstimate based on how you guys do your business and what you're seeing, where do you estimate revenues coming from? So is it realistic? And if so, how does it get there?
Yeah, technology, it makes it very realistic, with the exception of what I just talked about, the miners, stakers, hardware, software, wallet providers. Those, I think it's excess burden, and the net benefit therein is just not worth the cost of moving people offshore. But for centralized platforms, even some of the DeFi platforms that are creating peer-to-peer marketplaces, absolutely technology can solve that, and we can connect cost basis across the ecosystem in most cases. And so, yeah.
But specifically, the 28 billion, is that like a pie in the sky number, or is that something you think they could actually get?
I haven't ran the back of the napkin math on that. So I can't opine on the exact number. Offhand, it probably is realistic. It could be low, to be honest.
Wow. So are your thoughts that people are just inadequately reporting their crypto taxes right now?
Yep, absolutely. And that's proven. I think that people are, one, either don't have the tools. The crypto industry really has not done a good job of empowering their users to report natively within their platform. So TaxBit's changing that. We're making it dead simple within the same applications that users use on a day-to-day basis. Two, I think that crypto was founded early on in this, peer-to-peer anonymous concept, and that couldn't be farther from the truth to date, where it isn't anonymous anymore. There is blockchain analytic tools, there are exchanges reporting information, and there's just a sense of financial maturity that's coming to the industry.
So just looking towards the future, the bill is now moving towards the House. Two quick questions. One, do you think that this language is actually going to be changed? Like, do you think we'll successfully get an amendment? And the second is, worst case scenario, if it doesn't and it goes through in its current form, how big a deal is that? Are we really going to see all these crypto-related businesses in the United States?
I am very optimistic that we are going to get an amendment and find some middle ground here in relation to those three use cases that we've talked about many times: miners, stakers, software, hardware, wallet providers. If we weren't, I don't know. I haven't let my mind go down there and kind of hypothesize on what would happen. But yeah, I agree. I think there would be some downstream repercussions.
Hey, so Austin, you're FTX US. They're you guys are partners. Are they clients? How are you guys involved? And what do you do? Do you provide their data to the IRS? How does this work?
Yeah, we're partners and they're a client of ours. And so we're running, like I said, their 1099 program. And it's not just the 1099 reporting. Where TaxBit really thrives is we've brought a real-time model to the tax space. I like to use the analogy of your doctor. You go into your doctor, you come back home, and a few weeks later, you get a bill in the mail, and you had no idea what that doctor visit was going to cost until that envelope is in your hands and you're opening it. Well, I think in large part, tax has followed a similar pattern where at the end of the year, you get your 1099s, you get your W-2s, and you start plugging chugging into your tax filing software, and you're full of anxiety where it's like, what the hell do I owe? What's my burden going to be? And so TaxBit, we're not just delivering these 1099s on behalf of an exchange's users. We're using our APIs to power in real-time gain and loss reporting straight to users' accounts on the platforms that they use. Well, then that visibility allows people to start making forward-looking decisions. Hey, I should sell this lot as opposed to this lot. I could tax larvest by doing this. And you can control your whole wealth situation therein from the platforms you're using on a day-to-day basis. So you're going to see that rolled out with us and FTX and so many others.
Is this just for is it just for the U.S. or is it for their global operations as well? And are you working with any other exchanges like that?
Yeah, dozens, and you're going to hear lots of announcements over the coming weeks and months leading into the 2021 tax season, with another one actually later this week, a big name that everyone knows. So yeah, excited to share more on that topic. It is just in the U.S. right now. That's one of the reasons we raised so much money is we're quickly going to the U.K. We'll be there in the coming months, and then other countries to follow.
Austin, I wonder if there are any privacy concerns with all this data being collected and, everyone's information being processed.
Yeah, absolutely. Privacy and security is one of the biggest investments of our business and the forefront of everything we do. I think it is no different from any other industry, whether that be your core fiat bank account, a stock exchange broker. Every single one of those has to do KYC, and they all use, third-party vendors to do their appropriate regulatory filings that are mandated. And so TaxBit's kind of that back-end provider, just like Thomson Reuters or Broadridge is in the traditional fiat space.
Yeah. All right, Austin, we'll leave it there, but congratulations on this raise. We'll be watching out for further announcements coming up and appreciate you coming on the show. That was TaxBit CEO Austin Woodward. Coming up, we'll check in with Nick Day, our Coindesk Global Policy and Regulation Managing Editor, for our latest regulation update.
Coindesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. Coindesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
Coindesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
Coindesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with Coindesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of Coindesk's The State of Crypto newsletter. Welcome, Nick. So, Minneapolis Fed President Neil Kashkari is sounding off on his diminishing outlook on Bitcoin and the crypto markets, saying there are just thousands of garbage coins. Can you give us more context?
Yeah, we've seen various Fed officials start to weigh in on crypto and different aspects such as stablecoins a lot, especially in the last couple of months to a year. And, the Fed's Neil Kashkari being the latest is not a surprise. I don't even think this is the first time he's actually mentioned crypto. I'm pretty sure he's discussed Bitcoin in the past. But, it's just, I think it's a simple signal of just how much attention the central bank is actually paying, to this industry and to the fact that it has been a pretty I'm not gonna say it's been like all good year for crypto, but it's been a very intense year. Crypto's really starting to take more mainstream attention. So I don't think it's a surprise that Fed officials are starting to weigh in on this.
Is Kashkari getting any blowback because of his role in the in the financial crisis a decade ago, particularly, chiming in on Bitcoin when Bitcoin was created and crypto when it was created in response to the financial crisis.
So a lot of the references I've seen are actually more to his remarks from last year when he was talking about, printing money as part of the COVID relief efforts and to kind of mitigate all the, economic turmoil we saw last year in the U.S. It wouldn't surprise me if people also, start pointing to that from, his work from more than a decade ago as well. But, at least so far at the moment, it really seems to just be this more recent, work.
Crypto people have short memories, I think, and they're too young.
All right. Nick,
any updates on what's likely to happen next week in Congress?
So we're still waiting for word, but the House will reconvene on Monday. And I think the big question right now is whether or not amendments will be allowed. It's very possible that House Speaker Nancy Pelosi might choose to follow in Senate Majority Leader Chuck Schumer's footsteps in just passing the bill without, adding amendments or allowing for any amendments. And if so, that would probably be worst case scenario for the crypto industry, which really wants to get an amendment in there. And there is bipartisan support for bringing an amendment to modify at least the crypto tax provision. But there are a lot of non-crypto politics involved in this bill. So, we're going to be watching to see how exactly Speaker Pelosi handles, both the progressive wing of her party, which is threatening to, withhold votes for the bipartisan bill that we're talking about, unless the U.S. Senate passes a much bigger infrastructure package. But there's also moderates in the Democratic Party who are, more in favor of the bipartisan bill than the broader infrastructure package. So there's a lot of politics to just kind of watch, and how that resolves will determine what happens with this bill that we're watching.
All right, Nick. Well, rest up now because it's going to be a busy next couple of weeks. All right. That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. Time now to check in with Crypto Twitter with our tweet of the day. This one from Crypto Boom News that's been getting a lot of retweets and likes. People in Afghanistan try to withdraw their money from banks, but the top bankers have all left town. Likely no Afghans will get any of their hard-earned money back. This should show you how important Bitcoin is for the world. Control your own money. All right. The Bitcoin community weighing in on the crisis in Afghanistan. That's it for First Mover. Thank you, Emily Parker and Lawrence Luton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching Coindesk TV.